Good morning and welcome to Stock Market Today for Wednesday, April 17th, 2019. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at Dan_Russo_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email to follow along with this show, as well as get daily stock ideas for you to consider in your inbox every market day before the market opens. U.S. equities finished mostly higher on Tuesday. The overall upside was limited. Financials, energy, and industrials outperformed, while REITs, healthcare, and utilities lagged the broader market. Treasuries were weaker across the curve. Dollar was firmer against the euro and sterling, but pretty much little changed against the yen. Gold down a little over 1%. WTI crude up 1%, settling near its best levels of the session. So as we said, fins, energy, industrials, throw tech and discretionary in the mix as your outperformers, REITs, healthcare, utilities, and add in the consumer staples. It was really your defensives and your bond proxies that underperformed yesterday, especially as REITs were heading higher. Rates rather. S&P futures, as we get to the desk this morning, are up 20 basis points. Asian markets were mixed overnight. China and Japan both had small gains. European stocks are higher this morning. Treasuries are mostly weaker, 10-year yield pushing up against 2.6%. Dollar is lagging the euro, but little change versus the yen. Gold up 10 bips. WTI crude adding on, up 70 basis points here this morning. So really a ho-hum kind of day in the market yesterday. Stocks continue to consolidate their recent gains, really spinning our wheels here around that 2,900 level. Now, down below, I've highlighted support at the 2,850 mark. You can see it was recent highs as well as this gap opening from a few weeks ago. Below that, we're talking about 2,800 to 2,815, this congestion area here, as well as the recent highs, or not recent highs, but the highs back when we were trending lower. Resistance comes into play, 2,900. We're starting to see it. And into the 2,940s range. That's the top from back in September. RSI remains in bullish ranges, but it's fading. You can see it here. Fading from that 70 level ever so slightly. Some talk of this negative divergence here. It's ever so slight. Worth keeping an eye on, especially with the market trading up near resistance. But all in all, RSI remains in bullish ranges, signaling that momentum is with the trend. Add to that Chaikin money flow is bullish. Indicators line up. They're confirming price. Continue to feel that the highs at around 2,940 are going to be tested. Now, we're going to take a look because in the short term, we are overbought. We have our overbought, oversold indicator that's proprietary to us at Chaikin Analytics, and we're going to take a look at what that means a little bit later in the show. But all in all, we're continuing to stay the course. Your market in a minute now. What am I talking about? My note to Chaikin Analytics clients today. Major markets in the U.S. are overbought in the near term. We'll look at that. Rates continue to move higher, lending a bid to the financials. We'll look at the financials. Bond proxies come under pressure. That's your REITs and your utilities. Still holding above support, but we're watching closely. Transportation stocks are overbought at resistance. We'll take a look at the IYT, and futures point, as I said, to a higher open here today. Taking a look at the power bars for the major indices here. Again, power bars, as a reminder for those of you who are new to the show, tell us how many stocks in each of these indices have bullish or very bullish ratings at Chaikin Analytics, how many have neutral, and how many have bearish or very bearish ratings. You can see the Dow 8-2, S&P 500 relatively flat on the day, 133 bulls, 148 bears. NASDAQ 25-8, so still greater than 3-1 for the NASDAQ, which outperformed yesterday. You know we've liked large cap growth. Small caps, slight outperformer on the day, 543 bulls, 295 bears. Bonds downtick, send yields higher. Financials see a benefit from that. Add to that positive responses to earnings. Financials up 1.4% yesterday. 40 bullish or very bullish stocks in the financials complex for only one bearish or very bearish stock. So the fundamentals are there. We're just waiting for the relative strength against the market to turn. According to the Chaikin Power Bar, large cap stocks and small cap stocks are bullish. Major indexes across the board are mixed. Now, our stock of the day today is CyberArk Software, ticker symbol CYBR. Computer software and services. This is a group you know we've liked it. Closed at $123.70 yesterday. Big outperformer, up 1.5%. Very bullish rating is due to very strong earnings performance, very strong price volume activity, very positive expert activity. However, the stock does have poor financial metrics, largely due to valuation and how valuation is viewed within our model. But when we take our 20 factors, roll them up from these 4 categories, we come out with that very bullish rating. So very bullish stock, strong trend, strong industry group, type of name we want to own. Very bullish stock, been outperforming the market for over a year. And you can see that even as the market was swooning last fall, this stock continued to outperform, right? Just kind of went into a consolidation, didn't see the big drawdowns that the rest of the market saw. From there, it emerged as a leader. You've heard me talk about stocks that hold up when the market's doing well will tend to emerge as leadership when the markets rebound. This is a case in point. Now, do we want to own it today? I'm thinking no. Just because we're closer to overbought than we are to oversold. Money flow bullish but waning. I want to wait for a consolidation here in the 110 to 120 range to set up an oversold condition to give me a more compelling entry point for CyberArk. Obviously, one we're going to keep an eye on. With the market overbought and with the stock overbought, I don't want to chase it here. Keep an eye on CyberArk, but we're not going to get involved here today. Add it to a bullish watch list. Looking at our sector tracker now, looking at the movement of the major sectors over the last 5 days. Financials have been outperforming. Strong earnings and the backup in yields have helped the financials, or strong responses to earnings, I should say. Financials up 3.5% over the past 5 days. But if we look at it on a relative basis, it really does just look like a counter trend move. It looks like a strength within the context of a larger downtrend. We're going to have to give it some time to play out. Obviously, we just looked at the power bar ratio for the financials. We know it's strong. So we know the fundamentals are there within our model. We're waiting for the market to agree. Industrials, catching a bit of a rebound there. That's a name that's a group that we've liked as a rebound candidate. Discretionary, we talked about it, breaking out relative to the broader market. That is a sign of risk on in the marketplace. Tech, obviously one of our preferred exposures for large cap growth. Staples, comms, and materials are middle of the road. Energy starting to perk up a bit, perhaps. We've been talking about the waning downside momentum in energy for a while. We want to see if it's going to begin to really change that trend. Signs are there, but not there yet. Your bond proxies come under pressure. Utilities and REITs look like counter trend moves to the downside for now. We're watching the $57 level for XLU. If XLU breaks $57, our bullish stance on the utilities has to change. Right now looks counter trend. Right now looks consolidation within the context of a broader uptrend. But again, we don't remain dogmatic in our view. When the facts change, we change our mind. We're keeping our options open. Healthcare, we've talked about it. We've banged that drum for a while. Underperformance in healthcare has been persistent for a while. We've wanted to avoid the group, especially the pharma and the services names. And as we'll note in a little while, it really was those big pharma, those big services names that led healthcare lower yesterday. Now, our industry in focus today is capital market services. Speaking of financials, over the past 6 months, this group has outperformed the S&P 500 by 1.86%. The power bar, which measures future potential, the power bar ratio rather, is very strong. 31 bullish or very bullish stocks, 2 bearish or very bearish stocks. Currently ranked number 2 of the 21 subsectors we track, moving up 2 slots over the past week. Indicative names: Ameriprise, Raymond James, and Stifel, AMP, RJF, and SF, respectively. What I am going to tell you here now is that they are all overbought in the near term. But I want to take a look at Raymond James Financial, because Raymond James Financial is an example of what we refer to as undergoing a bullish personality change. What does that mean? Very bullish stock, strong trend, strong industry group. You can see here, downtrend, stabilization starting to emerge from that stabilization. Now, what does it mean when we talk about a personality change? It means the rating goes from neutral or bearish and starts to become bullish or very bullish. And then the market and the model get into agreement. Dynamic duo gets in gear, and you can see this is a recent outperformer. At the same time, money flow is seeing an increase in bullish intensity. Stock is above the now rising long-term trend line. Now, there is some resistance here in the 90 to 95 zone, and the stock is overbought. So I don't think it makes sense to chase it here, but I do think that should we get a bit of a consolidation here in the $85 to $90 level that works off this overbought condition, that sets up a compelling entry in Raymond James. Should it continue to outperform? So again, I'm going to add it to a bullish watch list, but with the market overbought, with the stock overbought, and actually beginning to round out of that overbought condition, I don't want to chase it here. Type of name we want to think about owning, add it to a bullish watch list, not getting involved today. Looking at what's trending now, yesterday's S&P 500 gainers and losers. Qualcomm up 23% as it settles its patent dispute with Apple, catches a slew of upgrades as well, sending that stock higher. Progressive's earnings send that stock up nearly 7%. Insurance stocks are starting to do well again also. OMC up 5.66% following their earnings announcement. Western Digital caught an upgrade from Deutsche Bank, sent that stock higher, up 4.7% on the day. Skyworks is kind of interesting here because they were a beneficiary to the dispute between Apple and Qualcomm. Skyworks is part of the Apple supply chain. So kind of interesting to see this stock going higher even as Apple and Qualcomm have settled their dispute. We'll have to see how that settles out. Loser side of the board has one theme in common: healthcare, and in particular services. Now, HCA is a hospital stock. CI, Humana, Anthem, and CNC are all services stock, all getting caught up in the downdraft of the potential debate around Medicare for all and what that could mean for these services companies and what it could mean for their financials. These stocks have come under pressure. These stocks have been leading the healthcare group lower along with pharma. They continue to be in a downtrend. A lot of moving parts to the story here. I just don't think you want to go bottom fishing when there's all this political uncertainty out there. There are better opportunities in the marketplace. Let's continue to avoid these stocks for now. Now, as I said, stocks in the U.S. are overbought in the near term. Here's our chart. Here's the S&P 500 SPY ETF. Has a bullish Chaikin Power Gauge ETF rating. That's right, we do rate ETFs with our Power Gauge model, similar to the way that we do stocks. Now, what we can see here is above a rising long-term trend line. I think the highs around 294 are in play. However, in the near term, we are overbought. Here's our same overbought, oversold indicator that we use for stocks. It is overbought. Now, does that mean we want to aggressively get bearish? Absolutely not. The trend is up. Money flow is positive. I think the highs are in play over the next, kind of call it 1 to 3 months. But in the near term now, over the course of the next week or so, I just don't think you want to be as aggressive on the long side of the portfolio with this overbought condition in place. Now, financials rally on earnings and rates. Here's the XLF. On an absolute basis, you can see we're breaking through these interim highs. Still have some resistance to contend with in the 28.5 level. But what's interesting to me is we're starting to get a bit of a shift here in the RSI. RSI, after becoming oversold with the drawdown back in December, failed to become oversold on this pullback, retakes the 200-day moving average as the RSI remains in bullish ranges, and you can see that's coinciding with this backup in yields. Should yields continue to move higher, that's a tailwind for the financials. Now, I just don't see that as the base case right now. Yields running into resistance at the 2.6 level. Obviously, if we break through there, I'm wrong, and we'll have to change our review. But I'm going to give it some time to play out. Right now, there's solid resistance for the 10-year yield at 2.6%. I'm going to let the market dictate how we proceed from here. On a relative basis, we're not showing it on this chart. We showed it earlier this week. Financials still in a downtrend, but something to keep an eye on, especially with the fundamentals within our model being so bullish. Now, transports are overbought at resistance. Here's the IYT, the iShares Transportation ETF. Now, it has a neutral Chaikin Power Gauge ETF rating, but we can see here that there's resistance here. Call it 195, 197. Hit our head there, failed. Testing it once again. At the same time, our overbought, oversold indicator is at an overbought level and beginning to round lower. That tells me that this support at 180 is likely to be tested in the near term. Add to that the fact that the transports have been underperforming the S&P 500. I just think we could see a pullback here in the transports in the near term. Don't want to get involved there. Actually want to look for opportunities on the bearish side to play for a pullback in transports, and something like JBHT, JB Hunt looks kind of compelling. Clearly in a downtrend here below the 200-day moving average, which is declining. The scooter rating, which is a measure of relative strength within stockcharts.com, clearly in a downtrend, down here near the lows. At the same time as IYT is hitting its head on resistance, I think that you can if you're long JBHT, you want to sell it, I think you can look for opportunities to play to the bearish side in JBHT. It's actually my bearish stock of the day in Chaikin Analytics today. Head over to ChaikinAnalytics.com, sign up for the email. We will see you back here tomorrow.